You guys ready to multiply some dividends? Hey, welcome back. This is Spooky's Revenge with another $500 5-year series episode. And today I wanted to kind of elaborate a little bit. I got some questions over the weekend. I want to elaborate on the strategy that I'm using for these special dividends and why it's cool. So let me get my face out of the way and we'll just dig right in. So first things first, a special dividend is a kind of a one-off dividend payment that companies do, usually when they get some sort of windfall. So maybe they make a little bit of extra revenue. Maybe they settle some sort of agreement and want to pay off the shareholders for having faith in them. There's any number of reasons that a special dividend can occur. Just understand that it's not a recurring dividend payout in most cases, like a monthly or quarterly payout. So we're going to take advantage of those by trading both the dividend payout itself as well as the P&L of the stock. So let me walk you through what I'm doing here. So I'll just go top to bottom here. This is just a list of the special dividends, and I'll start with HVT because that one was one of the most straightforward positions I had. So if you look over here, you can see that these are the buy and sell orders, okay? And this is the price. So I got filled at a market order, and then I sold this one. My microphone's being weird here, sorry. So I got filled at market for the buy, and then I sold at 31.69. So all I really had to do was buy it before the ex-div date, which is this blue line here, which is 11/27, so at the end of last month, just after Thanksgiving, and then sell it after that. So that makes me eligible to receive that dividend payout because my name goes in the company's book as a holder of record. So that just means I'm entitled to receive the payout. So it's pretty cool. So at the fundamental level, that's all dividends are, okay? So in this case, it was one of those one-off special dividends. So I just bought before here, I sold after here, and then on December 13th, I'll receive that payout of $1 since I just had the one share. And I can just do this over and over and over again. Anytime there's a special dividend and I have confidence that the stock won't necessarily fall off by $20, I can trade that, right? And all I have to do is, there's a couple steps here, right? First is to make sure I'm buying it before the ex-div, and then I'm selling it after the ex-div, okay? Second is to manage the position. So if it falls off really hard, I have to make a choice whether or not I want to sell it, cut the loss, and re-enter before the ex-div, or if I want to manage the position, average down, and then break even after the ex-div date, or reduce the position before the ex-div. So it's really up to you how you handle those positions. But I just wanted to show you the kind of rolling process that I've been doing. So if we look at IIIN, I'm just going to work my way top to bottom here really quick. You can see they have a special dividend payout of $2.50 per share. The stock is about $35, $36. That's really, really good. It was $32 when we stumbled across it, $33.69 I think when I finally started looking at it seriously. The ex-div date is December 7th, so that is Thursday. That's this Thursday. So I have to own the share before Thursday in order to receive the payout on December 22nd. And the record date is just an internal use thing. It's a lot of people think that you have to sell on the record date or after the record date. You don't. It's just an internal date that tells you when the company is kind of making that list of dividend payees, right? So we don't care about that one so much. There's a lot of misinformation out there, especially on like some education courses and things like that. So you just have to sell after the ex-div date because ex-div means first day without dividend. So that's all. So for the sake of not jumping down that rabbit hole, we can see that there's $250 payout, and that tells me that when I buy this share, I bought my first share at $33.42. Right? All I have to do is set a target $2.50 above that to receive that same dividend payout on a shorter time frame. So I don't have to wait until December 22nd. If the price goes up $2.50, I can just lock that profit and move on. Now we're going to add another step to that, and we're going to enter the same position multiple times as long as it's before the ex-div date. So in this case, before Thursday, I can repeat this process, right? So if this range right here, this $2.50 range is my profit, I can just do this multiple times and just set a target each time it goes up $2.50. Because remember, it's not really relevant where I enter this position if I'm just holding it through the ex-div date. As long as it doesn't sell off more than $2.50, I'll still be net profitable. And if it does, I can always recover the position, break even, all that good stuff if I wanted to. So all I'm doing in this case is I'm just taking this future dividend here from, instead of having to wait till December 22nd, I'm locking an instance of it here today, and then I'm seeking another one for that same December 22nd payout. Okay, so I'm multiplying my dividends in this case just by using this simple strategy, and that is just kind of borrowing from tomorrow, right? So in this case, if the stock goes up to $38.34 before Thursday, I'll sell it again. I'll lock in another 250 and I'll re-enter this position again. All right. So I'm just going to kind of work my way down the list here and show you guys where each of these positions is heading. So we look at IIIN. You can see that we bought, sold, made that profit, bought back in, and we're waiting to see what happens there. So HVT, again, that's just the one that I bought and sold after the ex-div date. The ex-div date is gone, so I don't really want to keep trading this one. There's no purpose in it other than the share P&L, which I don't really care about. I was there for the dividend. I got it. Net profit. I'm moving on. SSIC, same thing. I just bought one share. I'm waiting for the ex-div date, which is on December 19th. So if this goes up before then by the 45 cents plus 25 cent dividend, so 70 cents for my entry, I'll lock that 70 cents and then I'll re-enter the position to guarantee myself eligibility for the payout on December 29th. But in the meantime, I can still rack up those little 70 cent multiples of that same dividend in a shorter amount of time. All right. UVE is one that I've bought, sold, and then I've re-entered. So I bought it and I sold it, and I made this 13 cents per share and 16 cents per share, so 29 cent per share dividend profit early, right? I reached into the future, I locked it because the price moved, so I just sold. And then I've re-entered here at 16.82, and I have a sell target 29 cents above that at 17.11. So if it happens again before the ex-div date on Thursday, 12/7, I'll just do it again and again and again. And as long as I have a share before the ex-div date and I sell after the ex-div date, I'm eligible for the payout on 12/15 that I originally was pursuing. Okay, so I'm just adding profits on top of profits at this point. My overall goal is always going to be to get that dividend payout. All right, and you might say, oh, what if it drops by, maybe it's a 29 cent dividend payout, but it drops 50 cents, right, after the dividend. That's okay, because I can always I can recover that position. Or I can just understand that I'm locking in 29 cents twice, which is 58 cents. So I'm still net profitable. And even if I go net loss, I can claim that on my taxes. So I don't really care either way. But, this stuff wins more often than not because we're filtering out these stocks and we're looking at the ones that make the most sense and have the best potential. And as you can see, most of the time, these are going up. So I'll be net profitable overall. The only thing that would happen chaotically is if a stock just somehow gets halted and dropped all the way down, which can happen. Sometimes they can drop offerings and things because remember, special dividends are one-off, kind of unique circumstances. So it's important to keep an eye on them, but I'm okay with it. All right. And this is, again, it's a very small portion of the portfolio. The bulk of it is in this passive dividend growth that I am not going to be selling. I'm just going to be buying the shares, amassing them, and reinvesting the dividends. Okay. So in this case, Kim, it's the same process. I did it over and over again. So 9 cents here. And then there was a 20 cent dividend here, so 29 cents. So I already bought one share and sold for 29 cent profit on the share P&L before the ex-div date of 12/6, and I just re-entered because I'm still in a position where I can get a share and be eligible for that payout on December 21st of 29 cents. Right? So here, my average is, 2010. 2010 is my average, so 29 cents above that, I have a sell target at 2039. And if it reaches that before the 6th, so Thursday, I can sell and then re-enter, lock in that additional 29 cents. So that'll be two 29 cent dividend payouts early, plus the third one, which is the formal payout date on the 21st. So I'll be tripling my dividend payout just by locking in a profit, re-entering. Now, the only real issue here is that since I'm buying and selling repeatedly, it is a short-term capital gains tax burden because I'm not holding these shares for a year or more. However, it's the same exact result with the special dividend payout because I'm not holding these for more than a year just for the special dividend. I'm just getting in and out, which is why I'm only doing one share. All right, OCSL, I only bought one share. My sell order is set. I don't have to think about it, right? It's going to go up. It's going to go down. I don't really care. All right. Now this one I haven't had the chance to multiply my dividend payout just because it hasn't gone up here and hit that share P&L equivalent to the dividend payout, which in this case would be 63 cents or 62 cents. I'm sorry. If it does, right, we got the XDiv of 1214, so I can do this anytime before then, as long as I re-enter before that XDiv. I just add more profit to the dividend payout that I was already getting in the first place, right? HTHT, it's the same thing. I bought one share, I just re-entered it, or I'm sorry, I just entered it. And I was kind of waiting for it to come down a little bit lower, but I wanted to get in before I made this episode. And it's the beginning of the week, so I don't want to spend the whole week trying to, look at charts and stuff. So right now we're kind of in this little descending situation here with this little wedge forming. So again, I'm not worried about if the stock goes up or down because I either get a profit that's taxed or I get repeated profits if I can enter and exit early repeatedly, or I get a loss which I can use to claim 100% of that against my income and trading P&L for the year. So either way, it's a win-win-win, right? So I'm not too worried about one share going up or down. All right. For this one, it's a 93-cent dividend payout, again, on a $35, $36 stock. It's pretty cool. XDiv date is 12/20, so I still have a couple of weeks. And then the payout date is January 17th. So I got to wait a little bit longer on this one. And I just wanted to also really quickly walk through. I decided to pull the trigger on the dividend tracker premium subscription just to kind of see what it had and show you guys if it's going to load. It takes a minute sometimes. I'll just pull this one over. It likes to hate me. All right, so as you can see here really quick, with the addition of these new profits, I do have an annual income of $366.38 with a December income of $36.49, which is roughly 20% dividend yield. Okay, so I got the premium subscription mostly for the payout calendar, and for some reason this is lagging so much, but if you're on the free version and you have more than like 4 positions in your portfolio, this will be somewhat limited. So you're not going to see every single piece of information, and it won't, sorry, I have a couple portfolios in here, and it won't count just the, it won't show all the payout dates. It'll just show like 4 of them, right? So you'll have some limited information here. So I decided just to pull the trigger and see what it's got. I do like the calculators that it has. It lets you, I wish this was going a little bit faster. It lets you calculate like your net growth and how many shares of which positions that you enter you'd need in order to achieve that goal annually. So that's pretty cool. There's also a compound growth one where you start with, starting principal, make contributions, have your growth rate, number of years, tax rates and stuff if you expand this here. So it's pretty cool. There's also a community section, goals. This isn't by any means a pitch for the dividend tracker. I just wanted to show you guys that it is something that I personally find value in. And I like it. So it's for me, it's worth the $15 a month. They have a yearly thing too, but I just think it's cool. I like it. I like just being able to see all the payouts too. And I'm going to have plenty of positions open. I'm just going to keep rolling these until they're XDivs. And then next month, so going into January, I'm going to start looking for special dividends to roll into January as well. So kind of every month, I'm going to have a little cluster of these that I plan to trade throughout the month. And it's going to be cool. It's a nice, simple process that we can repeat over and over and over and over. And it makes some good profits if you do it right. So this episode is 14 minutes long, so I will end here and I won't ramble for 5 minutes. And I will see you guys next time. Thank you. Bye.